welcome to this explainer. Today we're diving into some seriously eye-opening source material that totally flips the script on financial marketing. I mean, what if I told you that a Forex brand could build massive, rock-solid credibility without dropping thousands of dollars on ads? We're talking no paid campaigns, zero influencer deals, and absolutely no mega budget. Just one highly focused strategy. When I was digging through this material, I was honestly blown away by this experiment, because it proves you don't always need the deepest pockets to win the biggest audience. So let's set the stage for this zero-budget PR experiment. Okay, let's dive into this. Can a brand actually pull this off with literally $0 in ad spend? Well, to answer that, the source material walks us through a fascinating real-world test. The architect behind this experiment decided to try and get a Forex brand featured on a massive, super respected financial platform. We're talking Yahoo Finance level, using almost zero budget. And no cheating by buying sponsored posts either. Now, if you know anything about the financial sector, you know it's incredibly tough to get noticed organically. The results here were definitely not what most Forex companies would expect, and we're going to break down exactly how it went down step by step. But first, we really need to understand the battlefield we're operating on. Section 1, the problem with ads, renting attention. Look, in this fiercely competitive market, brokers are out there blowing massive budgets just shouting, "Choose us," over and over again. It's basically a non-stop noise machine of flashy ads and giant deposit bonuses. But here is the fatal flaw in that old-school strategy. Attention does not always create trust. Just think about the trader's mindset for a second. Before they ever actually open an account or deposit their hard-earned cash, what's their first move? They ask questions, they research, they want to know if a broker is actually legit. They hunt for independent third-party info online. They're thinking, has anyone credible actually vouched for this company? Getting a trader's attention with a shiny pop-up ad, that's easy. But getting them to actually trust you with their money? Yeah, that is an entirely different ballgame. Mere attention without that underlying trust is pretty much useless. And that brings us to the core philosophy for today. Trust is not a marketing bonus. Trust is the product. I really want you to lock this concept into your brain. In financial services, you aren't just selling a trading platform. You're not just selling low spreads or lightning-fast execution speeds. You are selling a relationship built on absolute confidence. If there's no trust, there's no transaction. Period. That means your reputation isn't just some nice-to-have bonus feature. It is literally the ultimate non-negotiable competitive advantage in this entire industry. And this brilliantly illustrates that core conflict. On one side, you have ads, which basically just rent attention. Sure, advertising can drive traffic, it can generate leads. And yeah, it gets you those short-term results. But the exact second your marketing budget runs dry, poof, that visibility vanishes into thin air, and your competitors can just swoop in and outspend you. On the flip side, PR builds reputation. Smart financial brands know they have to invest in lasting authority. Public relations isn't about renting a billboard for a week. It's about building this monument of credibility that stands standing long after the initial push is over. So, how do we actually pull this off without a massive budget? Let's transition into the mechanics. Section 2, the PR playbook, executing the zero-budget strategy. The very first lesson here is understanding how the media actually works. There's this massive mistake that almost every single company makes. They launch a brand and they immediately think, hey, journalists are going to want to write an article about us. But let's be real, journalists aren't looking to print your advertisements. They want actual stories. If you just send them a generic sales pitch, it's going straight into the trash. To avoid that spam folder and deliver genuine value, you've got to follow these 3 steps logically. Step 1, find a newsworthy story. Your company needs a real compelling reason to be featured. Step 2, write a real press release. We're not talking about a promotional flyer here, but a structured, professional narrative that explains exactly what happened and why it matters. And finally, step 3, distribute for credibility. The goal here isn't just racking up random views on a social media timeline. The goal is appearing exactly where credibility and trust already live. Let's break down that first step a bit more, because honestly, this is where most people fail. What exactly does a valuable story look like? Well, highly newsworthy angles include things like, launching a groundbreaking new technology, sharing unique market insights, hitting a major regulatory milestone, publishing a deep dive industry report, or reaching a really unique business milestone. Notice what's glaringly absent from that list? The phrase, "we're the best Forex broker." Literally everyone says that. A truly valuable story answers one fundamental question. Why does this matter to the market? If you can answer that, you've got a story a journalist actually wants to tell. Now, what's really interesting about this slide is seeing the actual outcome of the approach. Let's look at section 3, the results, what worked and what failed. Looking at the data, the winning tactics become incredibly clear. First off, positioning via insights was absolutely huge. A brand that shares real industry knowledge and innovation instantly sets itself apart from a brand that just shouts about its promotions. Second, consistency for authority. I mean, one single article is nice for a quick bump in awareness, but securing multiple credible mentions over time, that creates true, lasting recognition. And third, creating permanent digital assets. Unlike a paid ad that literally disappears the second the money stops flowing, media coverage keeps generating credibility long after it's published. It becomes this permanent, highly searchable piece of your online reputation. But, we've got to look at the failures too if we want the full picture. So, what didn't work? First, expecting instant results. PR is not some magic shortcut or a shiny button you press for overnight success. It is a long-term, reputation-building marathon. Second, sending generic press releases. If you write a story purely for your own self-promotion, it is going to be completely ignored by the media, or worse, laughed out of the newsroom. And third, focusing only on promotion. The best media stories aren't about how amazing a company thinks it is. They are about value, insights, and real market impact. The gap between these two approaches is just massive. On one side of the ledger, we have the old promotional mindset. The core message there is simply, use our platform. And the result? You get ignored, because that offers absolutely zero value to the reader or the journalist. But on the other side, we have the value-driven PR mindset. Here, the message shifts to, here's why this company actually deserves attention based on its insights and impact. The result? You earn actual media coverage. Making that shift from the left column over to the right column literally changes the entire trajectory of a financial brand. So the crucial point is this. As we bring this explainer to its climax, let's look at section 4, the final verdict, competing for trust. We've looked at the fatal flaw of just renting attention, we've walked through the zero-budget playbook, and it all builds up to this one undeniable conclusion. Advertising says, pay today, get attention today. You pay for that visibility, and the very moment you stop paying, that visibility stops dead in its tracks. But PR? PR says build credibility that keeps working. You create authority, you build trust, and you establish this concrete proof that potential clients can discover for months or even years down the line. One is a fleeting expense that just drains your budget. The other is a compounding asset that strengthens your brand permanently. And why does that difference matter so much? Let's connect this right back to the core human element. Traders do not just buy products, they buy confidence. The biggest, most successful Forex brands in the world don't win just because they have the flashiest ads or the most bottomless marketing budgets. They succeed because they win that crucial research and comparison phase. When a potential client goes hunting for proof that your brand is reliable, what are they actually finding? Are they stumbling into an empty trail of expired ads, or are they finding a solid wall of credible third-party validation? Which leaves us with this final, incredibly provocative question to chew on for your own long-term growth strategy. Are you competing for clicks, or are you competing for trust? Because honestly, if you're only chasing clicks, you're always going to be at the absolute mercy of your daily ad budget. But if you compete for trust, you build an unshakable foundation of credibility that nobody can simply outspend. Thank you so much for joining me for this explainer today. I really hope dissecting this source material challenges you to completely rethink how you're building your brand's reputation moving forward.